The third quarter of 2021, the recovery in Sub-Saharan Africa has picked up. But according to International Monetary Fund, the IMF, the war in Ukraine after Russia's invasion has resulted in a growth that will most likely slow in 2022 to 3.8%. This latest development comes on top of the effects of the COVID-19 pandemic, increasing food insecurity concerns and high fuel prices. Let's talk more about this with Allier from the International Monetary Fund, joining us now from New York. Mr. Allier, good afternoon. Thank you very much for your time. The outlook for Africa by the IMF in terms of that report for this year is not really looking great due to those number of factors. Can you outline to us, our viewers, some of the disruptions that have impacted on growth on the continent?
Good afternoon. Yes, you see, a bit of the good news was the recovery in the second half of last year was stronger than expected. So our estimate for growth for the end of last year, we increased it from 3.7% to 4.5%. However, for this year, the outlook has gotten a bit cloudier. A number of reasons. One of them is obviously Russia's invasion of Ukraine. It has had a very severe impact on food and fuel prices. And this is having effects around the world, but Sub-Saharan Africa is highly vulnerable to this impact. You have two sets of countries, those who are commodity importers. Those are suffering both their balance of payment, their fiscal accounts, because the fuel prices are really affecting their accounts. And you have other countries who are exporters of commodities, like South Africa is one of those cases, which are not being impacted on the trade element. In fact, we're now projecting current account surplus for South Africa this year. However, these two developments are having a strong impact on prices across the region. And this is happening at a time where the governments in the region have a very limited, what we call policy space, or it means capacity, macroeconomic policies that they can implement to mitigate the impact of this. I think this happens at a time when global financial conditions are tightening. We see the Federal Reserve in the United States already rising interest rates, and there's some market expectation that the European Central Bank will also do that towards the end of the year. So this tightening global financial conditions make financing more difficult for the world, but certainly for Sub-Saharan Africa. And also the war in Ukraine introduces some uncertainty that make the spread that these countries pay, that means the interest rates these countries pay on top of the rates paid by the U.S. even wider.
Now, if there's such tightness around financial resources, and also you say governments on the continent have a very tight policy space to maneuver, what will the implications, what can the implications be likely? You said rising food prices, rising fuel prices, for example, due to the war in Ukraine.
Absolutely, you know, as we have all been feeling the heat already on this. We have seen fuel prices going up quite sharply and food prices. We see inflation in the region going up, no country escaping from that. And unfortunately, the impact of these price increases and the acceleration of inflation hits the most vulnerable. I mean, the weakest segments of the population are the ones who are most affected by these developments. So what we see is the governments, within the limited policy space that they have, they need to implement policies that, well, obviously there's still a prioritization regarding vaccination of COVID. This is a region with low vaccination still. But beyond that, you know, these countries need to reprioritize spending so they can dedicate more resources to mitigate the impact of these fuel and food prices on the poor, on the most vulnerable segments of the population.
More spending, would there be particular focus for that spending? You can't just spend.
No, that's exactly the point. For the expenditure, these expenditures should be focused on mitigating the impact. This can be, in some cases, providing some tax breaks, perhaps on fuel. In other cases, may include providing some subsidies or cash transfers to the poor. However, it will be important that some other expenditure will need to be cut. And the government will need to look at some of the wasteful spending items. It will need to assess whether the resources are being directed to their best uses.
Yeah, with the slowing down of growth across the board, as you've said, as the IMF, and with rising food and fuel prices, that's driving higher inflation. You say across the region, no country, including South Africa, will escape higher inflation. The vulnerable, the poor, are bearing the brunt of all of this. The implication, could it be, does the IMF foresee more social unrest, for example?
Well, as we know from experience around the world, and not only right now, but over time, is obviously when the social conditions deteriorate, there's obviously a higher risk for social unrest. But that's why we believe it's very important for the governments, within the limited space that they have, to use this space in a targeted way, in a smart way, so they really try to mitigate the impact on these more vulnerable groups. I mean, that's what we believe is priority number one at the moment. Now, as I said, because of this limited fiscal space, this needs to be done in a way that it doesn't increase the already existing debt vulnerabilities in these countries. And what I mean by that is several countries in the region already have very high levels of debt. I mean, the levels of debt in the region are the highest since the beginning of the century. These obviously need to be careful so that you don't exacerbate those problems.
Now, just finally, Mr. Allier, short to medium term, things are not looking great. Your outlook, I mean, beyond this year, do you see a little bit of sunshine somewhere, or a silver lining somewhere, or things are just pretty gloomy for Africa at this stage?
Well, I tend to be positive in terms of, obviously, an important feature over, let's say, in the short, medium term, the next couple of years is, I mean, how the war in Ukraine evolves. Obviously, that's a key element. However, if we look forward, we believe key policy priorities for the region include economic diversification, in particular in those countries who are heavily reliant on commodity exports and production. That's essential. It is also very important to create the conditions for the private sector to flourish. Given the limited space that I mentioned for the government, the fiscal space, it's really the private sector that will need to be able to lead this growth going forward. So I think government can implement a number of reforms that will be helpful to promote the private sector growth in the economy. And finally, it is also important for governments and to working together with international partners and working with the private sector to work on mitigating the impact of climate change. Adaptation is very important. This is a region that is highly vulnerable to climate change, but it's also a region that has a lot of potential to produce renewable energy. So therefore, for example, climate change, it is a challenge for Sub-Saharan Africa, but it's also an important window of opportunity that if the continent plays it right, it can really help underpin stronger, more inclusive and sustained growth.
And the developed nations would have to assist in the funding, for example, of that climate change adaptation strategies.
Well, most definitely, the international community is committed to this. As one first example, we saw it in the COP26, where a number of countries, the US, the UK, the Germany, the EU, France, they committed already $8.5 billion to support South Africa's just energy transition. If this is done right, this can serve as a blueprint for the support to other countries. What is essential in this is that this support that is provided by the international community, it is adequately used, is used in an efficient way, and start yielding results. Because when you start having good successes in some countries, it can eventually be replicated in other countries. We're very hopeful to see success in the case of South Africa, because we believe he has a leading role in Sub-Saharan Africa, and this really can help as a blueprint for the support to other countries.
Mr. Max Allier, thank you very much for your time and comments there. He's, of course, from IMF, talking to us from New York on the back of the release of the latest IMF report. Well, three main areas he believes that governments like in South Africa and elsewhere on the continent should focus on in terms of the way forward. And one of them is climate change adaptation. And we've got KwaZulu-Natal to teach us a few lessons about that, not just political speak, but in action. And the international committee making those commitments at COP26 that took place in Glasgow in Scotland just a few weeks ago.